Good morning. This is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. Last week was a great time to be a day trader. The SPX didn't go anywhere, but we had a lot of high volatility momentum opportunities in both directions amid rotation and dealers chasing deltas, selling weakness, buying strength. And we most certainly capitalized on the week, up $20,000 or 12% in our 1% risk model portfolio. Now, I did not trade Friday, and I was only present for a few hours on Thursday. I was traveling, finally back in the Western Hemisphere, which I'm very excited for. No longer will be trading at night. But every day this week presented very good opportunities. And I played both the call side and the put side, and many trades over 100% ROI. But the biggest thing here is due to the momentum, due to the volatility, the trade duration of these trades were very short. So a lot of these trades we would put on, and 5 minutes later they're 100% return. So when you have momentum like this and you're breaking transitional levels above, below, can present very quick opportunities. And once again, we did capitalize. Our trade desk was very active last week. On Friday, the SPX closed flat to 73.54, and we had a lot of flat closes last week amid rotation. On Friday, tech down 1.9%, semis 4%, mags, however, caught a bid up nearly 1%, and software stocks up 4%. So that kept the market somewhat range bound. And we were trading the same levels dynamics all last week. So below 7,400 flip level, this was major resistance. And when you're below it, we want to anticipate elevated volatility and give extra attention to the VIX. So looking for those confluence points between VIX and the SPX levels. Now on the downside, we had 73.50. This was support for much of the week. Every time we broke below it, demand was present. However, after many tests on Friday, we were looking for a break, and we got that flush down into the SPX put wall of 7,300. That is our downside target and lower bound, which we had a nice squeeze, unable to reclaim 7,400, and once again rolled over to close flat. Now this setup was nearly identical to the one we took on Monday. Now on Monday, the SPX level was 73.50. On Friday, it was 7,300. So you can say that this was a bit of a better setup. But in regards to the VIX, some key levels that we were looking at last week was 20.5. So you can see every time we came up there, volatility sellers were active. And that was a level that we were essentially buying the SPX. So going long SPX off of. And then we saw vol crush, vol crush, vol crush, vol crush, and that's what's going to lead to that nice squeeze rally on the upside. In regards to other VIX levels, 19, which has been the pivot for several months, and then 18 as support. And these levels remain valid here this week. For today in the pre-market, the S&P 500 is trading higher, up 1.1%, NASDAQ up 1.3%, and the VIX relatively muted, trading just above the 18 handle. Now, the test of a put wall is often associated with a multi-day up move, so it's good that we're seeing some continuation here, but bulls need to reclaim 7,400. Every time we broke above it last week, it got sold into. But given the number of occurrences, if we break it the next time, perhaps here today, more likely we hold it than false break. But the big zone on the upside, which was the high last week, 74.20, 74.25, that would be a bullish breakout, opening the door to 74.50, followed by 74.64, that's the SPY flip, and 74.70. There's also a downsloping trend line within that area. So if we zoom out to the 30-minute chart and we connect these recent highs, we can see that there's a trend line in play, which could potentially act as resistance. Now, exactly where this comes into play depends on time and velocity, but just mark that off and be aware of it. In the event we do break this zone, it opens the door to the SPX call wall at 7,500. In regards to the downside, levels unchanged, more or less. So we got 0 gamma 73.65, the 73.50 level, 73.25, 73.14, and then major resistance on the downside. Major support on the downside at 7,300. Now, there is potential for a strong upside move in the S&P 500 this week, next week, or let's say sometime in the near future. Of course, vol still has room, so VIX has room to the lower bound of 16. So if we reclaim those transitional levels, it's more likely we're going to see volatility sellers become a little bit more aggressive. But what we really want to see for that strong rally is going to be renewed interest in the Mag 7 names. Now, if we look at the ticker MAGs, which is the top 7 S&P 500 stocks by market cap weighting, down about 15% peak to trough. So if we do see rotation back into Mag 7s and we break out of this trend, we could see a sharp move higher in the S&P 500. So keep in mind the Mag 7 names is about 55% market cap weighting in the S&P 500. So if they're going to start to outperform again, it's going to pull the S&P 500 higher. So in terms of intraday, keep a close eye on mags, keep a close eye on technology, on semis. This is something we've talked about a lot over the past couple weeks. But once again, if we see that rotation back into mags, the SPX could see some nice upside. Transitioning over to our dashboard, the SPX flip level remains unchanged at 7,400. Above, all strikes are positive. That is supportive for the market price. Below, most strikes are negative. That is destabilizing for the market price. Above 7,400, you can see the 74.20-25 zone. Above that, the very shallow profile, so the SPX can move quite quickly if we get that breakout into 74.50, and then we see 74.70 and then 7,500 as the SPX call wall, the strike with the highest net positive gamma. On the downside, 73.50, significant level, as well as 73.25, 73.20 zone, followed by 7,300, which is the put wall, the strike with the highest net negative gamma. In terms of the implied move today, 1.1%. That is an implied high of 74.35 and an implied low of 72.73. In regards to the calendar, no major releases today, but we are going to see some quarter-end flows, and we have the JP Morgan call or roll tomorrow. Now, the JP Morgan strikes are not in play. However, the roll can be impactful, but we'll talk about that tomorrow. Additionally, here this week, we have non-farm payrolls on Thursday, and the market is closed on Friday for a holiday.